Hello traders, how have you been? How was your last week? Well, lots happened, and this is my usual weekly take on the Nifty, Bank Nifty, rest of the sectors. I also have the RRG graphs open. I'm going to take a look at that as well. But first things first, I have the weekly and the daily combination, and my usual NexxT plus RSI indicator and the price indicator, which helps me with the trend direction, divergences, and certain triggers. So first thing first, the weekly on my left hand side, what we have is, as you can see right here, is a red HAGB. Our trend indicators are fairly positive, not strong, okay. And the momentum which we are picking up from the RSI is also supportive. So last week's price action, this particular price action over here, I would say is a sign of consolidation or slowdown after the recent 3-week bounce back. So it's an improving chart, not improved completely because it is essentially a bounce back after the fall. So view from the weekly chart should be cautiously bullish. Bullish because most of the parameters are bullish. Cautiously because, of course, the overall market conditions, the geopolitical situation, and the fact that it is still a bounce back. So one can go bullish, one can go for long trades, but they need to be a little more careful. With this in mind, if we come to the daily time frame, now daily is where some action activity had happened over the last couple of trading sessions. We had a decent trend, we had a decent momentum reading, but we had signs of clear slowdown over here. And with Friday's move, typically Friday's move, what we have is a super trend and a Heiken reversal. This I see as a first sign of short-term trend reversal. I am yet to get some confirmations from the trend indicators as well as the EMA of RSI. Overall, the daily chart is sloping down, which of course, if you track price, you know it's sloping down. Any kind of a pullback from here on will be extremely important. The reason I say this is the pullback, if it fails, will open a further downside. The pullback, if it holds, will open a possibility of the weekly breakout. So I would like to give you two levels. The first one is weekly high, last week's high. Any, let's say Nifty, any sector or any stock, wherein you see on the weekly charts you have a trend and a pullback, an HAGB. Unless and until last week's high is crossed, there is very likely to be a persisting selling pressure, weakness, choppiness, volatility, not a fine, clean uptrend is what I mean. And if you see the Nifty slipping down further below Friday's low, or any kind of a pullback, bounce back on Monday, Tuesday, and those lows are getting broken, that will be a sign of negativity, right? When I combine the weekly, daily, reading like this, I continue to hold on to my thoughts that it is cautiously bullish. You might get long, short trades on both the sides if you're into derivatives. If you're a long-only trader, then I would suggest, exercise some patience and wait for some really good high conviction setup. Till then, if you do not trade or if you trade less, it's actually better for your overall performance and capital. With this in mind, can we go to the mid cap and the small cap? The mid and small cap will give you very, very similar kind of a reading that we just discussed with the Nifty. Now, I personally have been sharing my views with you every end of the week. And I've been particularly more cautious or more bearish on the small cap. And it makes sense because if you can see the short-term trend reversals with Heiken and super trend happened almost 5 trading sessions before. The weekly charts are all the same, similar in line with the Nifty. So all of their weekly time frame, unless last week's high is taken out, don't do any long trades aggressively, or even if you find some good long trades, just hit and run trades, get in, get out quickly. It's not the time that you sit on your positions. On the small cap, the signs of weakness are more prominent. Pullbacks have failed again. Or should I say, pullbacks have led to further downside. So I would strongly request and suggest stay away from the small cap pack. Now, before we take a look at the sectoral charts, what I would do is, it's been 9 weeks for the Nifty since this bottom. It's been 9 weeks now. And so if I take you to the RRG graphs, let's figure out the benchmark as Nifty 500. Let's change the time frame to weekly. Let's increase the count from 5 to 9. Now over here, I've got a lot of sectoral indices and all those, Midcap 50, Midcap 100, Midcap 150, Midcap 250, etc., etc. So all those I'm going to take out. I'm going to focus on the key sectors, to be precise, So let's say the small caps can go away from here. The intention very clearly is to focus on the sectoral names, not the 100, 200, 250s and all that. I think I've more or less managed. And let's fit this. And let's focus. Let's sort it out in terms of percentage gainers. I'll cross-check Nifty 500 weekly, 9 weeks. Perfect. So Nifty Private Bank, Nifty Bank, Financial Services, PSU Bank, all of them are in the leading quadrant, but they are losing vertical distance. It means that the momentum of the relative strength is dropping, which means a relatively stronger sector which was performing and leading the market must be slowing down. So both of us know very clearly that Bank Nifty, Private Bank and CNX Finance, these are the three sectors which had hit a lifetime high recently. They are your pockets of strength. They are your relatively strong sectors. And they are going through, if you take a look at the weekly chart here with me, they are going through a sign of consolidation, slowdown. The trend momentum levels are fine. I don't see any worrisome divergences on the top. So it is essentially cooling off. Finance is cooling off. Bank Nifty is cooling off. And Private Bank will be a mirror image of the Bank Nifty. What we can make sense out of it, I'll repeat again, a nice uptrending chart is cooling off. And so if it crosses last week's high, it will be a sign of continuation of the trend. So cautiously bullish. In fact, we can take the cautiously part out of this also. You know why? Because this sector is in a strong situation. It has just given you a lifetime high breakout. It's a bullish chart, but re-emergence of bullish will only come if it crosses above last week's high. The only inhibition, doubt, worry that I have with this particular chart, with this Bank Nifty chart, is that it had recently given us an all-time high breakout. Breakouts are prone to breakout failures, which means that if I change this to the line chart, and if I point out that 3 weeks back this was the breakout bar, after which there was an inside bar, it did not go anywhere, and now last week it has broken down, it gives me the feeling of a breakout failure. Breakout failures are common, and successful breakout failures tend to reverse the breakout significantly. Means if this is a successful breakout failure, this market is not going to, this chart is not going to bounce back or any bounce backs. The best sign is whenever it bounces back, very quickly the low of the bounce back gets broken. It means that a larger retracement is happening. Is that the case here? I'm not too sure. I would say I'm split between 50-50. It is the readings are predominantly bullish. It can go through a deeper retracement. If you are into derivatives, you will easily catch these retracements on the pullback from the daily time frame. If the daily time frame comes further down, we have previous highs where we can expect some support. So this is one pack which has the potential to drag the Nifty down from a short-term point of view. This is the pocket which also has the potential to be the leader going forward if the weekly breakout happens, right? So I think banks and financials going forward next week can play an important role on either direction, actually. If the market stays down, one can look at shorting opportunities here if you're into derivatives. If the market gives a surprise rally and goes up, one can look at the finance and banks and the private banks because they are relatively stronger. So please do not ignore them. Observe. Going back to our RRG graphs, it's oil and gas, which is looking very clean. This kind of a movement on RRG is something I personally like a lot. It tells me it is gaining horizontal distance, means it's gaining relative strength. And it's kind of angling slightly a little bit up, which means it's gaining momentum as well. So these are good, sweet spot for long traders. By looking at this RRG graph, if you take a look at that of oil and gas and energy, more or less is very, very similar because a lot of overlapping names. These should be in an uptrend and they should be doing better than the Nifty 500 over the last 9 weeks. And this is where one should look for bullish signs, or let's put it other way. If any of these names, if these two sectors shows you signs of bullishness going forward, it makes sense to take them because the RRG graph is showing us they have strength in them. They're gaining strength. Is that the case? Can we take a look at CNX Energy? And let's take a look at on my left hand side, the weekly chart. Yes, 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 same logic. Cautiously bullish, I would say, similar to Nifty. It's an HAGB. Last week's high, weekly high breakout is important. After all, it's a pullback after a serious correction. So let's not get too overly bullish about it. But yes, weekly high breakout is important. Does that reflect anything on the daily chart? Well, no. The daily chart is got itself synced on the downside. It's opening up and it's going to give us a retracement. So I would like to use a word make or break. If I add this price analysis and club it with my RRG graph analysis, then I should be more keen to look out for a long trade than a short trade. And if I do find a short trade and take a short trade in this pack, then I should not be expecting a huge correction because RRG graph is showing me strength. That's the logic. When you combine the reading of RRG, when you combine that with price, you try to figure out whether it's clear bullish, clear bearish, cautiously bullish, which is this one. And in a cautiously bullish situation, if I'm getting short setups, I'm rather hit and run. Quick short trades get out. So energy lies there. Oil and gas and energy. Apart from that, you have the FMCG. FMCG has been a tough nut. It was losing momentum. Now it's looking good. By the look of that arrow, it's gaining both horizontal and vertical distance. I always prefer to discuss FMCG with consumer durables, but consumer durables is singing a different tune altogether and it's on the lagging quadrant. You see, the consumer durables RRG graph is actually going vertically up, but it's in the lagging quadrant. It does not have relative strength. FMCG, on the other hand, was in the leading quadrant and it's angling up. Clearly, FMCG is stronger than consumer durables. With that in mind, can we come to the charts and take a look at CNX FMCG? Good looking weekly chart, no problem. Same logic, weekly high breakout important. Daily, similar thing, short-term weakness. So if you're a long-only trader, you should be looking, it's very simple. I'll repeat again. If you're a long-only trader, I think 90% of the charts, your trigger point should be last week's high for some serious bullishness. If you're of the long trade where you take today and probably an intraday long trade or 1 or 2 days, then it's fine. You're still below last week's high and taking some long trades, get out quickly. That's what I mean. FMCG, I would suggest wait for some signs of reversal as the RRG graphs are improving. On the other hand, if we take a look at the consumer durables, which was in the weakening quadrant, the lagging quadrant, and it was picking up vertical distance, if you remember, the weekly chart is actually not that bad, if you honestly ask me. It is giving me a pullback in an uptrending situation, which means weekly high-low for me is extremely important. But if you see, the daily correction has happened quite a bit. So how one should approach this? The RRG graph is telling me I do not have strength, but I'm picking up momentum of my strength, relative strength. Which means when I go back to the chart, I can see weakness with the overall markets coming down. And I can see a bit of a strength in the weekly chart as well. Clearly, this particular chart clearly make or break last week's high-low. If last week's high breakout happens, it will continue to show momentum of the relative strength. However, if it slips, that's not going to be a good news. So you will get both the trades over here. I think we did see it was Friday's trade, I believe, wherein Titan's big move was supporting the market, supporting this pack particularly. So whenever you see any sector, big gain or big loss, go down to its constituents and figure out which stock, individual stock. Is it a broad-based consumer durables move, or is it just one heavyweight stock like Titan, which is helping the sector? So keep that in mind. It's extremely important. So consumer durables and FMCG, both long short opportunities, but from a long trader's point of view, FMCG stands better. Within the improving quadrant, there's media, manufacturing, energy we discussed. Media, MNC, manufacturing, I do not track that closely. I'm more interested over here in IT. Why? Because after the banks and financials, IT has the maximum weightage. You cannot expect a cleaner RRG graph than this. Very clean, weakening to lagging, just improving a little bit. This tells us the chart should be in a downtrend, maybe trying to bounce back. And that's exactly what you will see if you open the CNX IT chart. Clean downtrend, trying to give you a bounce back. Right? I would strongly suggest long-only traders stay away from this pack as of now. If you're a short-term long-only trader, if taken today within a day or two, it's fine. You can trade these kind of trades in any market conditions as long as you're disciplined. But if you're looking for a meaningful long trade, I would still suggest let's wait for the weekly charts to improve a bit. So IT from a long point of view, I would suggest to stay away. And from a short-term short point of view, if the current lows gets broken, this is the weakest sector, right? And then you have pharma and healthcare and realty. That's what I'm left with and also auto. I would like to talk about healthcare and pharma. If you take a look at that, you will see just the opposite of what we found in oil and gas and energy. Oil and gas and energy was traveling left to right and slightly angling up. This guy, the healthcare and pharma, is traveling right to left and slightly angling up. If it's angling down, it would have been better actually. What does this mean? This means that you're losing relative strength. You're picking up momentum once in a while, but essentially you're losing relative strength. By the pure RRG graph reading, if this pack shows you sign of weakness, you should be looking to short. Will I be looking to go long? Honestly, no, because it's losing strength. With that in mind, if we click on, let's say, where are we? Pharma, CNX Pharma. You see, of course, a clean downtrend on the daily time frame. And the weekly chart is kind of mixed bag. I have positivity from the Heikens. I have a tad bit of improvement from the EMA of RSI. Super trend has all of a sudden had turned down because of this huge sell-off. And I would suggest very clear, if the daily chart bounces back, okay, if the daily chart bounces back and if the lows of those bounce back gets broken, this is what you should do if you're into derivatives. If you're a long only trader, simple, jab tak, till that time last week's high is not taken out, you don't do anything. Or if you do, quick hit and run, get out. I would suggest not to go for this pharma or healthcare names on the long side. Auto and I think realty. Auto is back to, from the improving quadrant, back to the lagging quadrant and bouncing back. This will be a tough nut. Let's try and figure out what's happening to the price chart of CNX Auto. Decent 3-4 weeks move, not bad, improving weekly chart, getting back to that cluster over here, a falling cluster. And on the daily chart, it's relatively better. My indicator is clearly pointing out a divergence to me and the Heiken has just slipped. So there are mild leading indications of slowdown from my daily chart. Weekly is very good. My RRG graph is telling me, my RRG graph is telling me you are in the lagging quadrant and you're picking up a bit of relative strength momentum. But based on RRG graph, you should be more on the sell side if you're into derivatives. If you're a long only, stay away from auto names. Short traders should wait for some kind of a pullback and go for it. You have the divergence in your support. So look for auto names if you find any weakling there. And finally, realty. Let's start with the RRG graph of realty. And if we take a look at the realty, it's clearly gaining vertical distance on the lagging quadrant. No relative strength, picking up momentum of relative strength means a downtrending sector must be trying not to fall. So let's take a look at it. A downtrending sector Yeah, trying to bounce back, but it's not any serious bounce back, to be honest. The best thing to do over here, stay away. You're a long trader or a short trader, it doesn't really matter. This is one sector you should stay away, right? Let it do whatever it wants to do. The range of last week was very wide. You won't be able to do anything if you're a weekly chart based trader. Better just to avoid. At times it's good, no, to just really know which one where you really do not want to trade. So after all these talks, where do we stand? Number one, Nifty has started to cool off, and last week's high of Nifty and most of the sectoral charts are very important. If you are in the derivative segment, you can look for short-term, quick, short trades, but whatever you do, make sure it's hit and run. Strength, confidence, improved sentiment comes above last week's high, period. And that's going to be there for all the sectors. It's the banks, the finance and the private sectors which are going to play a very important role because they were the erstwhile pockets of strength. If they slip, then yes, they will take the Nifty down with them. Rest of the sectors, I'm not too sure if I picked up metals. I'm sorry, I missed metals there. Metals is the weakest if you take a combination of the weekly and daily. If you're looking for shorts, metals. If you're looking for shorts, pharma and those healthcare. If you are looking for some kind of a bounce back, FMCG is looking good. Consumer durables make or break, which means that the market may throw long, short trades both at me based on my setups. I just have to figure out that what kind of a sector, what is the sectoral performance of that stock, what are the overall market sentiment conditions of the market, and based on that, I have to position my trades. Do not be complacent. These are the markets where you cannot be complacent, and please stay as disciplined as possible. Go for the trades where you have high conviction and try to avoid where you have a bit of confusion. You're not too sure what's happening to the charts. It's better not to trade, right? I hope you find value in these videos. Do let me know in the comment section, and I'll be happy to take a look at it and reply back to you. Thank you, everyone. Prepare for next week's trade. Goodbye.